Welcome, and I love this community. I've been a part of this community for a little over a year now, and I do love what you guys are doing. So without further ado, I'll get right into the nit and grit of the presentation. Share my screen. Okay, so today's topic is cryptocurrency value investing. So on today's agenda, we're going to be going over the evolution of value. So this is a brief overview of the evolution of money throughout civilization, okay? Then we're going to go into what exactly is cryptocurrency. There's a lot of mystery around this asset class. And that stems from lack of education. So what we want to do here is at least clear up any unknowns you guys might have, okay? So we're going to be getting into what exactly is Bitcoin and Ethereum. So I'm going to really highlight those two because they're the top two cryptocurrencies by market capitalization. And we're going to really focus on those two assets in particular, okay? Then we're going to be moving along into the use cases of cryptocurrency. So Bitcoin and Ethereum have different use cases, okay? So Bitcoin is technically an inflation hedge, and I'm going to get into why it is. And I'm also going to be analyzing Ethereum and the smart contract platform and how it is the future of finance, okay? And last but not least, I'm going to be getting into what my strategy, what has worked for me in the past. Like I said, I'm by no means a financial advisor. I'm just talking about what has worked for me in the past and what might work for you if you do your due diligence. So we'll get into the nit and grit. So like I said, this is a high risk, high reward asset class. So this is not financial advice by any means. It's solely to be used as educational content, okay? So the evolution of value, okay? So civilization went from bartering to crypto, okay? As humans have evolved, our medium of exchange has evolved as well, okay? So back in the early days of civilization, we were very heavy agricultural-based society. So, if you wanted something of value from another person, a service or a good, you would, trade them something you have of value for their service or their good. So, for example, if you wanted that cow, you would trade 10 chickens for that cow, okay? Then we slowly evolved into using gold as a medium of exchange. The Romans, the Egyptians really brought this into the forefront and mainstream. It's still used to this day as a hedge. And like I said, we will be getting into why Bitcoin is potentially a better hedge on inflation when you compare it to gold, okay? As we move along through the timeline of mediums of exchange, we go into coins, okay, which leads us into paper money, which we use to this day, fiat currency. What's interesting about, especially the US dollar, is actually backed by gold. Up until 1971, it was Richard Nixon that removed the gold standard from paper money. And we all know what happened to Richard Nixon. So do we really trust someone like that doing something to our monetary system? I think not, okay? And we leads into credit cards and whatnot. That's very popular nowadays. Visa and MasterCard are very big companies when you look at their market capitalization. We look into how money kind of got digitalized. We look at PayPal, Cash App, WhatsApp, that's electronic money. The big difference between electronic money and cryptocurrencies, these are all centralized entities, right? So you have one central entity that's controlling the transmission of these funds, okay? And then we move into cryptocurrency, which is a very, it's a big paradigm shift, and it's kind of hard to wrap your mind around it. But what my job is here is to kind of dispel any myths and kind of educate you all on what exactly cryptocurrency is. The big thing is it's decentralized, so there's no central authority that controls the facilitation of any of these transactions. Okay. So exactly what is Bitcoin? I know we're currently in a bull run, and what a bull run basically means, the the price has been skyrocketing, right? So people think it can only go up, which is not really the case, but we'll touch on that a bit later. But first, let's talk about Bitcoin. It was created by Satoshi Nakamoto in 2009. So the interesting thing about this, and this is kind of how Bitcoin gets its kind of mysterious, kind of dark connotations, is this Satoshi Nakamoto person, no one really knows who it is. People think he's dead because the initial wallet that he created the Bitcoin in, the first Bitcoin mine went to his wallet, has never been moved. So some people think he died, and no one really knows who it is, okay? Whoever did this, whoever created Bitcoin was an absolute genius. If you look at the open source code of what exactly is behind the mechanisms that facilitate Bitcoin transactions, it's actually genius, okay? But we're not going to get into that because that's just very complicated. Let's just get into the meat and potatoes of everything, okay? So what is it exactly? Bitcoin is the first decentralized digital currency, okay? It is the #1 cryptocurrency by market capitalization and dominance. And basically what it is, if I want to simplify it, what exactly it is, it's a network of independent computers that generate and verify monetary transactions, okay? So how does it work, you ask, okay? So say person A wants to send value to person B, okay? When they initiate the transaction, it's represented online as a block. So I know, you always hear Bitcoin and blockchain, okay? So I'm basically going to explain what exactly blockchain is, and I think you'll really have a good understanding on how revolutionary the technology is, okay? Not just Bitcoin, but blockchain technology in general, okay? So person A wants to send value to person B. This transaction is represented online as a block. So a block's created when someone wants to send value. So what this block is, what happens is this block is broadcasted. It's basically pinged all around the world. And basically miners are essentially people with computers or mining rigs. So they're basically computers with really fast graphics cards. So what these graphics cards do is they validate these blocks and they get a reward for mining. So if you ever heard the concept of mining Bitcoin, basically that's what they do. They validate the transaction. And what happens during a validation is there's a complex math problem, and basically these fast computers solve the math problem. So whoever around the world, they could be in Canada, they could be in Ghana, they could be in Nigeria, whatever miner solves that problem the fastest gets rewarded in Bitcoin. And once the problem is solved, once the block is solved, it's added to the chain. So what the chain is basically like an open source ledger of every record of every transaction that happens on the Bitcoin network. So if we look up here, I have like a little diagram of the ledger. So basically it has person A's wallet going to person B's wallet, and it has the amount that was sent. So I will touch upon it a bit later, but I know a lot of people are like, okay, governments don't like Bitcoin. They want to stop it. In reality, governments love blockchain technology because unlike cash, everything's recorded on the open ledger, right? So if they wanted to track terrorism financing, money laundering, et cetera, it's all on an open source ledger. So with this new Biden administration, I know that blockchain technology is only going to be embraced. And as you will see later on, we're very early. So everyone in this call, you guys are still early, okay? So like I said, once it's solved, it's added to the chain. So that's where you get blockchain. The block is a transaction. The miners solve the problem behind the block. Once it's solved, it gets added to the chain, which is the ledger, and it's recorded. Once successfully added to the chain, the value is moved from A to B, okay? So that's basically how the system works. That's why it's such a revolutionary software, because previously, say I wanted to send money to Ghana, I have relatives in Ghana, I'd have to go through Western Union and they would charge me fees. It'd be a centralized entity. Say, for example, Western Union, for some reason, didn't want me sending money to this certain entity, they could block block the money from being sent. With Bitcoin, I can send $1 billion for low cost fees, and it'd be there in less than 30 minutes without no central authority governing the transaction. Okay. So that's why it's so revolutionary, because it has first movers advantage in regard to that. So some of the pros, and I'm going to really hone in on this later on, but some of the pros, it's a deflationary asset. Okay. And it's actually it's the most scarce asset known to man. Okay. And I'm going to get into that a bit later. There's only 21 million Bitcoin ever created, and the last one will be mined in 2140. Okay. So we'll be long gone when the last Bitcoin's mined. So this 21 million Bitcoin, there's going to be an asterisk beside this, because there's actually not 21 million. As I communicated before, the initial first Bitcoin wallet made by Satoshi Nakamoto, the funds have never moved. So there, about 4.5 million Bitcoin has been just lost. Okay, so there's actually less than 21 million. Some of the other pros, it's easy to create a wallet. Anyone with a cell phone can go and create a wallet. So this is very good for banking people that don't have access to financial institutions. So this is going to be very revolutionary for the future of Africa. Unlike traditional fiat currencies, so fiat currencies are your traditional American dollar, yen, Canadian dollar, Ghanaian cedi. Unlike traditional fiat currencies created and operated by a government and central bank, Bitcoin is mined or created by people who solve mathematical problems with computer power. So these are the miners. So it's truly decentralized. No government or entity could ever stop Bitcoin. So we're going to move along. I'm going to get into Ethereum, and then we're going to go into the use cases of each. So what is Ethereum? And Ethereum is actually my favorite cryptocurrency. I started out investing in Bitcoin, but I did really see the use. I basically seen the value in Ethereum and how undervalued it is. And it's basically Bitcoin, but it's programmable. So it's going to be the future of finance, and it's going to be the future of Africa. So what is Ethereum? Well, it was created by Vitalik Buterin in 2015. So we actually know who created Ethereum. And right now it's ran by the Ethereum Foundation, okay? What is it exactly? Ethereum builds on Bitcoin's innovation with some big differences, okay? So both Ethereum and Bitcoin let you use digital money without payment providers or banks, okay? But Ethereum is programmable, so you can also use it for a lot of different digital assets, even Bitcoin. So this also means Ethereum is more than payments. It's a marketplace of financial services, games, and apps that can't steal your data or censor you. So in layman's terms, what I compare Ethereum to is Windows operating software, okay? Basically, it's also a store of value. You can use it it's digital money, but it's also a software platform that you can build applications, finance, you can build games, you can create art. I know you guys have probably heard of NFTs. Those are all built using Ethereum, okay? So how it works, it's similar to Bitcoin, exact same process. You know, it's proof of work. So basically, miners validate transactions. Once they solve the block and it gets added to the blockchain, they get rewarded in some Ethereum. Later on this year, they're going to be switching to proof of stake. I'm not going to get into the differences between it because it's not really relevant. Let's just keep everything nice and simple. And so you at least kind of get a good grasp on what these two are. So the great thing about it, it's a programmable smart contract. So what I compare a smart contract to is a vending machine. You go to a vending machine, okay? There's no one between you and the pop. It's just you and the vending machine. You put money in the vending machine and hit 1 for Pepsi, okay? The vending machine has a smart contract built in that, okay, once I receive this money and they press this button, I am going to dispense this item into the basin, okay? So that's basically what a smart contract is. There's an input and an output without an intermediary, okay? So as you can see, amazing software. It's a platform for innovation. So as you can see, there's banks. There's banks, there's mortgage applications that are all made on Ethereum. So now instead of having to go to your local bank, you could go onto the Ethereum platform, the Ethereum ecosystem, and get a loan, provide some capital, and get some interest, all without using central banks. And I think as myself, I live in Canada, but North America, being Black North Americans, I know we've all heard about redlining and how some of these banks were, inherently racist in the past. And I know they say they've changed, but you can give them the benefit of the doubt. But like I said, I think it still happens. Black individuals are, less likely to qualify for some mortgages. And that's all because we're going through a central authority. I really think that once the ecosystem on Ethereum really does develop in the next couple of years, there's going to be no need to go to your bank. You can go to a decentralized entity and get all your financial services completed there. So you're avoiding, ostracization from these financial institutions by going to a decentralized entity. So you can see that's pretty powerful. So yeah, platform for innovation, decentralized, low barrier of entry to access financial instruments. So I don't know if any of you guys have been to Africa, or maybe even some of you guys live in Africa, but like I said, Africa is not what they say on television. Like you go to Accra, it's a bustling metropolis. You can do whatever you're doing in North America and Africa. But like I said, there's still some people that maybe live in rural villages and whatnot that all they have is a cell phone, okay? Well, now this cell phone can basically be their bank account. Whatever capital they have, they can earn incredible interest or even lend money all on their cell phone using the Ethereum platform. So as you can see, the future of Africa, it all starts with the cell phone and cryptocurrency, especially Ethereum. So there's a lot of untapped potential there. Earning interest and yield on your capital is it's a very Western thing. And it's not going to be like that for too much longer once this ecosystem develops. So here's the cryptocurrency adoption curve. So as you can see, 2.5% of people are early innovators, early adopters are 13.5%, early majority. So people ask, where are we right now? Well, we're right now, we're probably in the middle of the early majority. So probably 25%. So we're still really early. You're not too late. So like I said, I'll get into what my investment strategy is. You're not too late at all. The opportunity is still ripe. We're very, very early. Okay. So we're going to get into the use cases of Bitcoin. We're going to bring it back to Bitcoin. It's the biggest cryptocurrency by market capitalization. It's the elephant in the room, I would say. And I would compare Bitcoin to it's digital gold, it's digital value, opposed to Ethereum, where Ethereum is also has a use case for digital value, but it also has a lot of practical applications. And it's basically a software development platform. But Bitcoin is basically something you want to accumulate. You don't really want to spend your Bitcoin. I know people, they call it a cryptocurrency. I like to call it a digital asset, because there's other cryptocurrencies that you want to spend daily. Bitcoin's one of those things you want to accumulate it and hedge inflation with it, okay? So this just shows you how much of a scam the fiat currency is. You look at inflation, so 1928, I don't know if you can see the shopping cart, $20 would get you a full shopping cart, even be spilling over. 1996, the shopping cart's just barely full. 2017, barely anything, and 2020, as you'll see, I'll show you the money supply, specifically the US dollar, incredible inflation, and you will see, I'll show the diagram. You look at Bitcoin, it was created in 2009, 2011, it would only get you, barely anything in a shopping cart. 2013, shopping carts almost full. 2017, overflown, and 2020, I like to say we're going to the moon. So but what I call inflation is it's silently robbing you. And people don't know this, so it's really good to at least have a hedge. And it's I'm a visual person, so you can see with $100, it's going to be worth nothing. And you look at Bitcoin right now, I think the value of Bitcoin is around $60,000 or just under $60,000 US. That'll get you a nice car right now. Opposed to 2010, that could only get you, a basket of food. And 2030, who knows what the potential is, right? So as I was saying previously, we look at the money.
Right.
Sorry. Oh, okay. So as I was previously stating, inflation, if we look at 2020, the money supply has increased by over 26%, okay? So what I like to say is, did anyone get a 26% raise in their salary last year? Probably not. So we're all getting robbed. Like I said, you have to really analyze risk. I'm not telling everyone to go out and put all their money into, cryptocurrency, be it Bitcoin or Ethereum. All I'm saying is, at least have, maybe 1% or 2%, maybe max 5% of your net worth in cryptocurrency, just as a hedge. So you at least have some hedge, because clearly, 26% increase in the money supply in 1 year. We're not going to feel the effects. The way inflation works is you're not going to feel the effects instantly. It's going to take some time. So I'm very bearish on the US dollar, just to be upfront, especially if they print 26% in 1 year, when on average, inflation is about 3% a year. Okay. So it doesn't really look too good. So a lot of people, when you talk about Bitcoin as a hedge, they bring up gold because, throughout history, gold's been, it was used in the Egyptians and Roman times. It was used as, currency in a medium of exchange, and also switched into being a hedge on inflation in present time. And gold is a good hedge on inflation. But if you look at Bitcoin versus gold, this is if you want to buy Bitcoin with gold. So this is per ounce. So we'll go to 2020, where my cursor is. I don't know if you see that, but right here. So in 2020, if you wanted to buy Bitcoin with gold, it'd be about 5 ounces of gold. Okay. Right now, if you want to buy Bitcoin with gold, it's about 28 ounces. So clearly, Bitcoin is far superior to gold in regards to, if you look at the charts. I'm a mathematical guy. I say, let's keep emotions out of it. Let's look at the charts. As you can see, if you look at it per ounce of gold, Bitcoin's just getting more expensive. Obviously, there's some dips here and there, but it's getting more expensive in regards to the gold price. So it's only going to go up. Okay. So the proof is in the pudding, I would say. So if we look at gold versus fiat versus Bitcoin, okay, so these are the traits of money. They're all fungible. They're all highly fungible, so they're all interchangeable, all non-consumable. They're all portable, except for gold. Like I said, say I had a friend and he wanted to send me $1 million worth of gold. That's not very practical, okay? $1 million worth of money, maybe that's a couple duffel bags. It's highly portable. Crypto, he can literally send me $1 million worth of crypto in, probably as little as 30 minutes, and all he needs is a cell phone, right? So Bitcoin is definitely highly portable. It's also highly divisible. It's more divisible than fiat and gold currencies, because a lot of people think, okay, Bitcoin's $60,000 right now. I can't afford a Bitcoin. Well, you don't have to buy a whole Bitcoin. It's infinitely divisible, up to 8 decimal points, or I think it's 10. Sorry. It's very secure, can't be counterfeited. People say, oh, can gold be counterfeited? Well, there's a big Chinese market for selling counterfeit gold, also counterfeit money. Bitcoin, there's only 21 million. As I communicated before, there's less than 21 million because a lot's lost. Gold is, it's hard to be transactable. So if most people that own gold, it's in custody. So if you want to even transfer it, you have to go through an intermediary. Fiat currency is highly transactable. So if you have cash, you can just give cash to another person. Crypto, very transactable. All you need is a cell phone. gold, it's a moderate money supply, moderate in regards to the scarcity, it's moderate, and the reason it's not high, because people say, gold's scarce. Well, it's scarce, but let's look at the economics of it. If there was an increase in demand of gold, there's going to just be more companies going out to dig more gold. Okay, you can't go and create new Bitcoin; it's impossible. And okay, so it's sovereign. Gold isn't sovereign. It's all over the world. A lot of countries own gold. Bitcoin, no one owns Bitcoin. It's a decentralized platform. So that's why you can see it's the only platform that's decentralized, and it's the only platform that can be programmable. And that's not specifically Bitcoin, that's Ethereum that can be programmable. So this is just a quick summary of the scarcity. So there's 18.5 coins mined, 18.5 million coins mined, 4.6 million Bitcoins lost. Okay, so 8.9 million Bitcoin is tied up with high net worth individuals, corporate treasuries, funds, and governments. So basically, the rest of the world, which is 7.8 billion people, are left to fight over the remaining 4.6 million Bitcoin. So there's 4.6 million Bitcoin for 7.8 million people. There's just not enough to go around. So even if you own a fraction of a Bitcoin, say 0.1 or 0.05, in 10, 20, 30 years, it's going to be worth something. It's going to be a good hedge. So I'm going to go into the use cases of Ethereum. Basically, one of the big, and as I was communicating before in regards to Africa, one of the big use cases is decentralized finance. Now, if you want to, use some lending platforms, you want to borrow money, now you don't have to go to Wells Fargo, you don't have to go to TD Bank. You can, have your crypto wallet on your phone, and you can access these platforms that are built on Ethereum. So basically, these are just applications built on Ethereum. What I like to compare it to is, I said Windows before, but it's maybe like iOS software. Apple created iOS software, and there's people every day creating apps and stuff that operate on that software. So a couple of the blue chips, and these are blue chip, they're very highly trusted. After the presentation, I'll go on the coin market cap. You can actually see the capitalization, but these companies have over billions and billions of dollars of locked funds in their treasuries, and they're decentralized. So Compound, Aave, 1inch, Bancor, Yarn Finance, DeFi Rate. These are all applications you can go to if you have cryptocurrency and earn interest, earn 10%, earn 8% interest, borrow at 0.5% interest rate. So it's especially for Africa and some people that don't have access to centralized banking, centralized banks. This is incredible. People that have capital, excess capital in Africa, can now earn a yield on their money all through their cell phone, and that's the future. Okay. Moving into, so this is the big hype in the news, is not NFTs, okay? And this is why I'm so bullish. I'm so optimistic on the Ethereum ecosystem, is because all those NFTs and all those art pieces, they're all getting transacted on the Ethereum platform, okay? So there's an immense amount of money circulating on the Ethereum ecosystem. People are creating art and selling it for millions of dollars, all using the Ethereum ecosystem. So whenever you see NFT, think Ethereum, okay? And NFTs aren't just for art, right? So art definitely went to the forefront of the use case for NFTs, but in the future, when you buy a house, your mortgage, your deed to their house will be an NFT. Say you had your medical records and they want to store them in a decentralized manner so they can't be hacked. And they're, people's medical records are very, very confidential documents. These can be NFTs on the blockchain, okay? If anyone owns a Rolex, when you buy a Rolex, now they give you a card that says it's a certificate of authenticity. In the future, they can give you an NFT that says, okay, this is one of one Rolex and it's certified, okay? Moving along, there's decentralized autonomous organizations. So these are basically decentralized banks, decentralized corporations that are governed by its users without influence from a central authority. So this is MakerDAO. MakerDAO is a very interesting platform. The reason I like it so much is, like I said, it's a bank, but if you own a MakerDAO cryptocurrency, you have voting rights. So you can vote on the governance. You can vote on, okay, this financial quarter's over, or the centralized organization is going to have a vote. Should we decrease our interest rate for our decentralized autonomous organization? If you hold one MakerDAO, or every MakerDAO token you own is a vote, so you get to have a say in the way that organization operates. And you have to really think of where we're at in regards to the adoption curve. We're very early, so this is just a start. Think about 10, 20 years from now, what the power of decentralized organizations, okay? So people may ask, how do I get started? Okay, so you can, if you're in the US, you can use Square, Cash App. So these are very easy ways to get some Bitcoin, transmit your fiat currency to some Bitcoin. PayPal now has it, Robinhood. Some exchanges that I would recommend are Coinbase. They actually just went public. So you can really trust them. I think they're the best overall, just for simplicity. They have an app as well. Binance is great if you're outside the US. I'm in Canada, so I use Binance. Coinbase Pro is best for active traders. I do tell anyone I come in contact to, do not trade Bitcoin or Ethereum. Just accumulate it. You can't go wrong there, okay? Coin Mama is quick and easy for transactions. I've never used it before, but I've heard great things. Some people, like my parents in general, they're old-fashioned. They don't want to even touch Bitcoin or any cryptocurrencies, and that's fine. You don't have to own Bitcoin to get some exposure. You can own PayPal because they own a lot of Bitcoin in the treasuries. Square or MicroStrategies, they own a lot of Bitcoin as well. So you can buy these stocks and still get some exposure. So we're gonna end here with my investing strategy. My investment strategy is find assets of value, something you get excited about when the value drops 50% plus. So I know this sounds funny, but I personally, and this is just my opinion, the asset does not have enough value to you if you get mad when it drops 50% plus. When Bitcoin or Ethereum drops 50% plus, because like I said, markets operate in cycles, as I'll show you in the next slide here. Market operates in cycles. So right now we're in a bull run. There's a lot of euphoria. Everyone's happy. Everyone's making money. They're saying, oh my God, Bitcoin's going up. It's going to go to $100,000, whatnot. But the reality is it operates in cycles. There's going to be booms and busts, right? So there's going to be a bull market, which we're in right now, and then there's going to be a bear market. I get excited when assets of value drop 50% plus because I can buy more and accumulate more for a discount. My strategy is I'm not investing for my first name, I'm investing for my last name. I'm investing for the long term. So whenever Bitcoin or any asset of value drops 50% plus, I accumulate. Make sure it's an asset that you wouldn't mind holding for 10 plus years. So Bitcoin and Ethereum, these are just the blue chip cryptocurrencies that you should just accumulate. $50 a month, whatever you can afford to put in, and just accumulate. And after 10 years, come back and you'll definitely have a smile on your face. So basically my strategy is it's pretty simple, just dollar cost average. We don't have to be, we don't have to be quants. We don't have to time the market. It's not about timing the market. It's about time in the market. Okay. You don't have to time the market and buy it at this certain point and sell it at this point. Just, calm down, have a nice strategy, whatever you can afford to invest, be it $10, $5, $50, $100, $1,000 a month. Just buy slowly and just accumulate your position. I'm a contrarian investor. So when market psychology is euphoric, beware. So right now there's a lot of euphoria in the market, and it's not to say that we're not gonna. It's not to say that Bitcoin's going to crash tomorrow. It's just one of those things. when everyone's euphoric and everyone's asking you, how do I get involved now? How do I get involved now? It's definitely something. There's a lot more risk in the market, so you want to be aware and do your due diligence before you invest any capital. Especially right now, there's a lot of risk in the market. Smart money was buying when Bitcoin was $5,000, and not too many people were talking about it. And that what leads into my second philosophy here is when market psychology is angry, when people are depressed and everyone's saying, "Oh my God, Bitcoin's going to zero," or whatever asset it is going to zero. That's when you want to look at, okay, you want to think of the times when everyone was talking about Bitcoin. I was going to $1 million, and you want to think, this asset has value. Has anything changed? No. The only thing has changed is price. That's good for the long-term investor, okay? That's going to lead me into my last slide here. Basically what this is a psychology cheat sheet. And basically just shows you like how the market works. When you look at the market, you will look at candlesticks. Candlestick only reflects investor sentiment, right? So clearly I would say right now we're probably in thrill. And once we're in euphoria, that's when, you know, like everyone's saying, I'm a genius, we're all going to be rich. That's when you should be very, you know, just careful when you invest money. Like I said, I love investing when, you know, the prices just collapse. No one's talking about it. Everyone's saying, oh my God, it's, you know, it's going to zero. That's when you want to really look at the fundamentals of the asset, be it Ethereum or Bitcoin, and you want to say, has anything changed? No, the only thing that's changed is price and investor sentiment. That's when you have an edge on the market and you want to deploy your capital. But like I said, the easiest method is just dollar cost averaging, spending as much as you can every month, be it $50, $5, and just accumulating and investing for the long term. And you can't go wrong there. So that's it for the presentation. There's some other things that if we do have time, I would like to show you like some of these decentralized applications, how they work. But I don't know if anyone has any questions. I can answer that before I do that.
Yeah, thank you so much, Mr. Hammond. That was such a very inspiring and well-informative session. So we're now at the question and answer section of the discussion. So we're going to open it up for questions. So please go ahead and raise your hand, or you can type your question in the chat box and we'll you know, answer it accordingly. So if you have any question for Mr. Hammond, now is your time. You can unmute yourself or when you're ready.
Hello, this is Deji. Sorry, I don't know where the hand raising thing is.
You're fine.
So great presentation. What's your argument behind money laundering? Like, how would they regulate money laundering? And I know that's the question number one. And the second question I had was, I was listening to a lot of documentary, not a lot, but I listened to some documentaries in preparation. And the argument is governments will try to re-centralize it, and in the sense that they'll try to make their own digital currency and make that like the standard. So those are my two questions for now.
Okay, so that's a great question. I guess the first things first, in regards to money laundering, in Canada, it's the Canada Revenue Agency. In US, I'm pretty sure it's the IRS. They can already look at, you know, where what wallets are transacting and what with other wallets. So right now, it's very easy to track money laundering, especially if it's on the blockchain, because it's an open ledger. And if the government really wants to find who's behind this certain wallet, they can easily find that. So that's why even if, and this leads in the second question, even if the US creates a digital dollar, they're not going to veer away from, they're not going to try to over-regulate Bitcoin. Because if you look at on S&P 500, Tesla has converted I think it was about 5% of the balance sheet into Bitcoin, and SEC, it cleared all SEC measures and there was no problem there. So I think if they were going to do something like that and clamp down, it would have already happened before all these companies, such as MicroStrategies, have transmitted so much of their balance sheet into Bitcoin.
Makes sense. Thank you.
Awesome. We have a question in the chat box. I'm going to read it out. Second asked, what is the difference between Coinbase and Coinbase Pro?
Coinbase Pro gives you access to more assets, and it's also lower fees. So if you have a high volume of trades, you obviously want to go with the lower fees.
Okay.
It's all about volume, yeah.
Awesome. Any follow-up question to that, second, or that's it? That's it. Okay. All right. So Ms. Lowell asked a question. She invested in Bitcoin and it went up and then down again, but it's back up. And she was just wondering, when is a good time to pull out, or if it's going to go down, don't pull out and just stay?
The way I look at it is, me personally, if you do sell your Bitcoin, it's going to be a triggered taxable event. Okay. And, once you get to a certain point, you want to, I don't think anyone disagrees with me, but you want to lower your taxes and you want to lower your taxable events. So this is when you can leverage applications into decentralized autonomous organizations. And instead of selling your Bitcoin, you can lock in your Bitcoin and actually earn a yield on it. So, or lend or borrow against it, use as a collateral. So instead of selling your Bitcoin, I would just accumulate it. And, if you feel like selling it, why not borrow against it, use it as collateral for something.
Okay. And she's asking, how do you do that?
Well, I could show you. There's a couple apps if I share my screen here. Okay. So these are various apps. Let's go to. So this is decentralized finance. It shows how much money is locked up in these organizations. So $130 billion are locked up in these organizations. Basically, all of these are different software, or if, for lack of better terms, these are different platforms that you can go and earn a yield. So for example, you could go on Compound. I can go on Compound Finance. I can log into the app with it's a Web 3.0 enabled. I could log into the app with my wallet if it works. You can log in with your wallet. So you could wrap your Bitcoin and you could earn a yield instead of selling it. So this is very low because this is a blue chip organization. There's some that you would get a higher yield from, such as, for example, I will go to 1inch Exchange. If you wrap your Bitcoin here, you can get 76.6% APY. And I know it's high and there's obviously some risk there. So what you can do is you can wrap your Bitcoin. So that what that means is you put your Bitcoin on the Ethereum blockchain, you put it here, get your 76% APY. And then what you do is you go on Insurance Ace, you launch the app and you get insurance on the protocol. So say you have 50 grand locked up here. Instead of selling your Bitcoin, you put it here and you get your 76.6%. Say, for example, something happens to this exchange and it goes down. You're not going to lose your money because you have insurance on the exchange. So, for example, I can connect my wallet here. And that reduces your downside risk, right? So that's what I'm doing. So I can get insurance. I can buy some covers. Say, so where we were on 1inch Exchange. So they have 1inch Exchange, right? I can go to 1inch Exchange, select my product. I got my insurance. And this is for, right now they're already Ethereum enabled. So say I went on a 1inch Exchange, instead of using Bitcoin by Ethereum, say I had $50,000 in Bitcoin here, which would probably, or in Ethereum here, I can go to, I can get my 71% a year. I can go on Insurance Ace and whatever amount, say it's 10 or probably be 50 grand, probably about 40 Ethereum. I can get insurance on that and I can cover it for 365 days. So now I have insurance. So I don't have this is my secondary wallet, my ETH is staked, but this is what it would cost you. The premium would be 1 ETH, and your 40 ETH, say worst comes to worst, this exchange goes down, I'm gonna get my money insured because I have insurance. So this reduces your downside risk, right? So that's why I'm like, why would you sell your Bitcoin when you can put it into here, let it work for you? Or so why would you sell your Bitcoin or Ethereum, put it here and then just get insurance on it?
Awesome. Someone actually asked the question, can you hold your asset for a long time on Coinbase, or can you only trade on it?
Yeah, you can hold on to it, but I look at it this way. Why hold on it when you can get it to work for you on one of these exchanges, right? If you have Ethereum, Bitcoin, USDC, they have a lot of pairs here. So why would you just hold it in your wallet when you can put it here, get a yield, and then get some insurance on it to cover your downside, right? So then your assets appreciating, and then you're also making it work for you. So you're getting your passive income, and you also have your downside risk covered because you have insurance in case the site goes down or something happens. You have insurance. So that's the way you kind of operate in this ecosystem.
Makes sense.
Yeah, so
All right. So there's another question. What is Dogecoin? Is it a type of crypto?
okay, that's an interesting question. A lot of people talk about Dogecoin. What I tell people, stay away from that. That's a very speculative asset, and it's basically a meme. It's one of those things where it really has no value. It only has value because people say it has value. If you look at the market cap right now, it's a $50 million market cap. And you know what this says to me? The reason Dogecoin is so high is because there's so much money in this ecosystem. Dogecoin at $50 billion market cap has me very bullish on the whole market, because if a coin that does absolutely anything, nothing, and is a complete meme can get to $50 billion, think about some of these other projects and organizations and decentralized platforms that are just starting and actually have a use case. If Dogecoin can get to $50 billion and does nothing, what's the next application that actually has a use case gonna go? It could go to $150 billion. So the whole Dogecoin fiasco just has me even more optimistic on the future of cryptocurrency, because there's just so much money in the ecosystem right now.
All right. Well, he said he's going to stay away from it.
Yeah.
All right. So what are your thoughts on the eToro platform?
I don't use eToro. I know you can copy people's trades, but I don't really know too much about the platform.
Okay. Awesome. Does anyone else have any questions? Oh, someone raised their hand. Hold on. Who is that? You can unmute yourself if you raised your hand to ask your question.
I did. Thank you.
I see you. Go ahead.
Thank you, Falaka. Yeah, Fred, thank you very much. I think that was a beautiful presentation, though I think I missed a chunk of it, but I've been kind of familiarizing myself with Bitcoin for a minute. So not Bitcoin, but the cryptocurrency industry as a whole. So I have an idea. I was able to catch up with some of the things you said.
Okay.
So I have quite a few questions, but the one that caught my attention was when you mentioned, I think you said, why hold your Bitcoin instead of making it work for you? Right. I think in the demonstration, one of the things, the very cool thing you did was the insurance aspect, So right. I mean, it's always a trade-off, right? Mm-hmm. So I think the insurance is something new, completely new. So I think that's a great idea. Yeah. I could follow up with you to kind of get more about that in case I want to do that. Mm-hmm. But when you say, why hold your Bitcoin instead of making it work for you? Isn't holding it working for you already? If you've already acquired it and the prices goes up, I mean, don't the price going up impacts the fact that you actually have a Bitcoin? What do you mean by making it work for you besides just holding it?
Well, if you're just holding your Bitcoin, you're only gaining from appreciation as the asset increases in value, okay?
Yeah.
But you can now actually have two income streams. The asset can appreciate, so as Bitcoin, appreciates in value, you can also earn passive income, monthly income from just locking into your Bitcoin into one of these platforms. For example, I'll go to another one. This is a really blue chip blue chip organization. And you can actually go here and you can deposit your Bitcoin. So it's just like you're holding, you can deposit your Bitcoin and see, you can earn 6.2% on your Bitcoin. So you're earning 6.2%. So every month you're going to get, you know, whatever the calculation that is, but a year you're going to get 6.2% on your Bitcoin. And also the value of Bitcoin is going to appreciate too.
Oh, okay. That's beautiful. Thank you very much. I think, yeah, that answers. I don't know if we have another time. I could probably come back, you know, ask you, you know, another question, you know. Thank you.
No problem.
Awesome. So it's another question we have here. It says, can you enlighten us on the difference between spot trading, future trading, margin, and staking farming?
Okay, so futures, you're basically going to be trading derivatives, which are basically contracts that basically the value of the contract derives its value from the underlying asset. So, for example, if you trade, so futures, you're basically trading derivatives. You're not trading the actual asset, you're just trading contracts. And then spot trading, you're actually trading physical Bitcoin. Okay. Staking is basically what I kind of went over, is you just lock in your Ethereum or whatever asset, whatever cryptocurrency you have, and you basically earn a yield on it. So basically you lock it in, like basically here, you stake your Bitcoin here and you get 6.2% a year. Margin trading is something I tell people to stay away from. It's basically using leverage. So you're borrowing money to increase your position size, but also you can possibly get liquidated. So I tell people to stay away from that. Just keep it simple.
Awesome. Thank you so much. Does anyone else have any questions, additional questions?
If there's none, I'll be very happy to follow off my question.
Go ahead, follow up question.
Thank you. So again, like I said, I think you might have addressed this earlier because I kind of joined late. So I got into the cryptocurrency space in, I think, 2018, right about summer. And at some point, you know, I invested about almost 10 grand. And that thing, before my eyes, came down to less than $1,000, right about sometime around 2019.
Okay, I'll even pull up the chart for you so we can kind of get some visual representation. But there you go. Okay.
So while you're putting that out, but right now that thing is more than that's triple. My wife is, you know, right in front of me initially, but now she's like, yeah, you're the man. I was like, yeah, I am the man. So the point is, I think one of the reasons why I got into it initially was because there was this conversation about it replacing money as we know it. But now that I'm more familiar with the nuance of what's going on in the, you know, crypto market, that it doesn't seem like it's going to replace money as we know it. Right. So my question is, what do you have some kind of an idea of what the future of cryptocurrency, Bitcoin, Ethereum is, besides the fact that it might be just a value holder, you know, in terms of asset or maybe wealth?
I think it's going to be integrated in the mainstream society. So I feel like there's going to be apps that you're going to be using cryptocurrency without even knowing you're transmitting value on the blockchain. So I think it's just going to be even more integrated with everyday life. As far as Ethereum goes, I think that's the future of finance. You look at here, we'll go to top assets. So we look at Ethereum right here, $343 billion. Okay, so I think it's just like it's pretty much like hotels and Airbnb, right? So it didn't necessarily put the hotels out of business, but it kind of showed that there's a new ecosystem, there's a new paradigm shift of how to book your hotels. What Ethereum is going to do is it's going to be a paradigm shift in regards to finance. It's going to be a new way to get a mortgage, lend, earn yield on your money. So I think they're going to coexist.
Thank you very much. I think that makes a lot of sense. I actually haven't thought about that. But do you also think that because it's so secure, because of the peer-to-peer decentralization thing, what role do you think it's going to play in terms of privacy and security? Do you have any idea on that?
I think in regards to privacy, once
Data privacy, that is.
once it really gets mainstream, I really think even transacting Bitcoin is going to be even less private, because everything's going to be an open ledger. If the government really wants to see if you're laundering money, they're going to be easy. They could easily go on the blockchain and find that, right? So that's why I feel that governments are pro Bitcoin. They love it, right?
I think I might need to rephrase the question. What I was saying was, one of the things that, again, earlier when I joined, one of the things that attracted me to it was the fact that there's transparency, there's accountability, nobody can take your money without your permission, so to speak.
Right.
And that's what I meant by, privacy, data privacy or data security. Like now people could probably account, right, and take your money without your knowledge, without you being able to do anything about that.
Right. Yeah, I think it's going to be even more secure for the everyday person. So you're basically not going to rely on a third party to facilitate transactions, and you're going to be really if you go with the whole sovereign citizen argument, you're going to be controlling all your value, right? Because, for example, in Greece, a couple years ago, they had a crisis, and people went to the bank, and the bank didn't have their money, right? So with Bitcoin, you have your wallet, you have your private keys, this value is secure, and it's as secure as you want it to be.
Thank you so much, man. That was very helpful. Appreciate it.
I have a question, actually. So when you mentioned about, getting the insurance on it, is this similar to how right now, banks have, like, for example, the FDIC insured or whatever? Is that similar to what you were talking about as far as insuring the cryptocurrency?
Well, it's definitely not, because the FDIC, I'm pretty sure that there's an act, and in Canada it's a bit different, but it's actually outlined in the act. I don't know what act it is in the US, but in regards to this, it's going to be asset specific. I think just cover protocol. Sorry, just a sec here. So what exactly, can you rephrase your question again?
So what I was saying is, you have all this asset, or, in your cryptocurrency, and you mentioned about, like buying the insurance. No, well, not necessarily buying, but getting the insurance on it. So let's say something happens, and, is it insured where it protects your asset? Kind of like how, like the banks have the FDIC insurance, whatever, where your money is kind of protected. So I was wondering, is it similar?
Yeah, so like if there was a smart contract failure, for some reason the site got hacked or something went down, as long as you have insurance, you would get your assets back.
Gotcha.
Right,
that makes sense.
Yeah.
This is all still very new to me, and
yeah,
but great job though with the presentation. I love the, just showing us the screen. I think some people are more visual, so I think
right. Just before I move along, this is the asset. This is top assets in the world by market cap. So as you can see, Bitcoin is a $1 trillion asset. So technically, it's the biggest bank in the world. So gold's 11 trillion. I really think in the future we're going to see Bitcoin flip gold in our lifetime. So we're still very early. It's almost about to overtake silver, but as you can see, it's a $1 trillion industry. Okay, and then you look at decentralized finance. Just a sec here. We're not talking about pennies. If we look at decentralized finance, so this is how much money is locked up, earning yield or being borrowed or whatnot, how much money is being transacted. There's $130 billion operating right now. We're very early, as I communicated before on the adoption curve, we're really early. So we can see it's just been going up, the amount of value locked here. So it's over 100, it's over 1/10 of a trillion. So it's only going to be up. It's only going to go up from here, and it just kind of shows you that there's a lot of trust being placed in these decentralized finance applications.
Awesome, awesome. Thank you so much. Does anyone else have any final questions before we turn it over to the closeout?
Question for you. So with Bitcoin price, what price, if you had to pick a price to buy at, what would that be?
I'm a net buyer every single month. I'm a net buyer since.
Got you. Dollar cost average.
Just to give you a quick visual representation, I'll make this really quick. I said dollar cost average, so just put whatever you can afford to lose every month. And here, I'll just show you a quick example here. So this is the BLX chart. So we'll do a weekly candles. Okay. So I hope everyone can see that.
Yeah.
So, like I said, I'm a data-driven person. So let's just look at the chart. The chart's the only thing you really have to look at. I don't know if anyone was around during the previous bull run. So this was in 2018 when it literally went from $1,900 all the way to $20,000. There was a lot of people that bought here, like literally the top. They bought at the exact top, and they said, "Oh my God, I wasted all this money," and they sold. They got scared and sold down here, right? So the way you got to look at this, you got to invest for the long term. Even if you bought here, even if you bought Bitcoin for $20,000, if you would have just bought every month, or even if you just bought there and held, right now you'd be, if you just bought, even if you bought at the top of the last bull run, you'd be up. You'd be up 200%. If you would have just held. So think about people that, like in my case, I just buy every month. So it goes down, I'm buying. Every month I'm buying. I'm buying. And what that does is your average cost goes down. So say you bought at $20,000 and then you bought at 8,000 and you bought here and here. At the end of the year or whatnot, your average cost might be in the middle. It might be $10,000, right? So I look at it as these assets have long-term value. I'm not selling, I'm just accumulating my portfolio, okay? So it doesn't even really matter. You could buy right here. So say, for example, Bitcoin's $57,000. You could buy right here and it could crash right here. I wouldn't be sweating. I'd just be, okay, I'm just gonna buy more because as I communicate before, markets operate in cycles, right? So it's a boom, it's gonna be a boom, a bust, boom, a bust, boom, right? So you just gotta look at it that way and don't really sweat the small stuff, right? So you could buy Bitcoin right here and it could drop and I wouldn't even sweat it if you're holding for the long term, so like 10 plus years.
Wonderful, wonderful. Thank you so much. If no one else has any final questions, I will turn it over to Funshaw to close us out. Thank you again, Mr. Hammond. That was an excellent presentation.
Thanks.
Thank you, Fred. Great job, and thanks for liking the team as well. Before we close out for today, so Fred, we have what we call the common sense finance tip. Do you mind just sharing? I know you've dropped a bunch of gems already, so if you want to just drop the kind of a common sense tip for today.
Well, I'm 25. I have no kids right now, but I think everyone should look at it this way. You invest for your last name, not your first name. So I'm not going for the quick overnight Dogecoin pump or whatnot. Some of that's just hilarious. People are making money, but like a lot of people are losing their shirts as well. So I'm just, keep it simple. Just invest every month what you can afford to lose. It could be $5 and look for assets that have value. Bitcoin, Ethereum. There's a long time. There's an immense value there. So just be patient. Don't get scared when everything drops. When it drops 50%, look at that as a buying opportunity. I don't know why assets like cryptocurrency and stocks are the only thing when if it goes on sale, people are, oh my God, it's the world's gonna end, right? If the new, if the new BMW goes on sale and it's 50% off, people are going to be like, oh, that's a great deal. But when it comes to like assets like stocks and Bitcoin, when it's 50% off, people get scared. I say, look at it the other way.
Awesome. No, I do agree with you on that one, right? Just like stocks or Bitcoin, right? Just if you believe in those investments, just put your money, month to month, right? And just kind of watch the value go up as well. I think also people just have to understand what they're investing in, so they have that comfort level to just keep investing. So awesome. Thank you so much. Do you want to share your social media handles for anyone that wants to follow you, or just?
Yeah, it's I'll type it in the box. It's Fred with the cheese. So I'm not really too
Fred
active in
with the
regards to that.
cheese. I like that name, Fred with the cheese.
Not really too active on that, but you know, you can always reach me there. I'm more than happy to, you know, if anyone DMs me and wants some help or anything like that, I'm more than happy because you know, the cryptocurrency space, it's very dominated by white males, and we got to change that, right?
I agree with you on that as well. Awesome. So thanks so much for today's session. And for everybody else, thanks for joining for today. And like we said, right, this is African Business Club. Our goal is to normalize financial literacy, networking, and ensuring about the edge, right? So, and that's what we do today as well. So if you want, please share your email address as well. Share a copy of today's presentation. And that should be going out this week, I think by Wednesday or so. So just put your email in the chat section and we'll send you a link to the YouTube video. Also, we are on Instagram, on Facebook as well. So don't forget to follow the African Business Club community as well. So last thing, like we said, right, we are kings and queens. Just treat each other with, you know, with love, respect, and let's find ways to empower each other, right? And, you know, be the best and be the king we can, you know, and queens we can be, right? So thanks, guys, and have a lovely week ahead. Thank you, everybody.
Appreciate it.
Thanks, everyone.
Thank you.
No, thank you guys for hosting me.
Oh, before we all hop off, there's a poll I just put up. I don't know if you guys can see it. I'll just leave that up. Perfect. Thank you, guys.
Okay.
Hi, Falake.
Oh, hi.
You know who's talking?
Of course. Good evening, sir.
Okay. How are you?
I'm doing well, thank you.
I'm so glad to see you, the host. I'm just joining for the first day today.
Oh, wow, wonderful. Hope you got some, you know, great knowledge.
Yeah. I got a lot of good information. I invest in cryptocurrency a lot, so.
Wonderful.
Yeah, so it's very educative. What you said was very true and nice.
Yes, definitely. Thank you so much for joining, sir.
Okay, no problem. How's everybody good?
Yes, everyone's doing well.
Yeah, I'll be joining as much as I have time. I've been very busy, so that.
No worries. Thank you, sir.
Okay. All right. Take care. Eh? God bless.
Bye. Let me end the poll.